Hello, options traders. So here we are a couple of days into the new year, and it's time to do a review of the alert service from last year and talk about a game plan or potential changes going forward. This is actually part of a process that I do every year with my trading. I like to go back and take a look at all of my trades. That's why record keeping or having a tool to log all of your trades in becomes so important, because you'll see as we go through kind of what happened last year, how certain things kind of stand out and become a little bit obvious. So I urge you to hang on for sure until the end of this video, because there's going to be some things there that I think you're definitely going to like. For those of you that responded to my survey that had been part of the service at some point during this past year, thank you so very much for doing that. And again, there'll be a special offer for you toward the end. Those of you that had not been part of the service but still filled out a survey kind of telling me what you might want to see in the service, I appreciate you as well. And again, I'll link toward the end of this that I think you might find of interest. So with that, let me get my smiling face out of here. As you know, before I do that, I started this service about a year ago. So I've traded for 30 plus years. I have taught all aspects of trading for about 6 years. I've worked for a number of different options trading companies, both in their educational and support side with some of their software programs, things like Option Alpha, Option Strat, a number OTA, Option Traders Assistant, things along those lines. So again, all that said, let's just kind of get started here and go through the presentation, take a look at kind of where we've been and where I plan on trying to take us. So first thing, I like this quote: hindsight fuels foresight. Learn from the last year, soar in the next. So that's kind of the premise here. Is let's take a look at what happened over the last year. Again, my very first year of doing my own service, and see how I can improve on that. What might I be able to do better? So if we look through the 2023 year in review, well, the equity curve was going really, really well up until Q4. Now, keep in mind that this is based off of 3 to 5 trades open at any time. Most of those trades would have a $2,500 max risk associated with them. So if there were 5 trades open at that max risk, that would be a total of about $12,500 in max risk. So that's what I'm basing the fact that I ended up just shy of a 100% return, because this line ended just below 12,500. But it had been up significantly more prior to running into a little trouble in Q4, and we'll kind of dig into that a little bit deeper here in a couple minutes. But again, overall, I would call it a good year, but Q4 certainly kind of put the screws to some of our trades. We had a 600-point up move that happened very hard, very fast. And I didn't adjust those delta neutral trades quickly enough and carried some too close to expiration, as people will note here as we take a look. Let's see. All subscribers, I want to point this out down here, that all subscribers have the ability to see every single trade that was made by going into the archived trade circle. If you are in the community, it's in the lower left corner, and you'll see a circle that says Archive Trades. If you go in there, you will see every single trade, all of the details on each and every trade, the video when I opened it, when I adjusted it, when I closed it, and then the final P&L, if you will, that Option Traders Assistant puts out on each one of those trades. So everything is very cleanly documented there for people in the service. So 2024, it should be 2023 in review. This is the P&L bar chart. This shows our different trades. And one of the things that we can kind of see as we take a look at this, and let me get my pencil going here, is we see that as we get later into the year, some of these trades, these losers here, started growing. Now, we had a couple really nice winners in here at different times. But as we got later in the year, those losers started growing. And obviously, that was a bit problematic to the equity curve overall. That was our drawdown scenario that, of course, we want to try to keep at a minimum. Again, most of those losses happened in Q4. As you all know, it was a very, I don't know if violent's the right word, because in an up market, I don't know if you'd call that violent, but regardless, it was a very sustained and persistent up move. And the other thing we'll notice here when we're looking at that is if you look at those bars, the green bars, the winners, the yellow bars, the losers, we had some trades where the max loss, while it didn't exceed the max gain, they were pretty close. And that becomes, again, a little bit problematic. And one of the things that we certainly want to make sure that we take a look at. So we did have 73% winners, which is a good number of winners. The largest loss did not exceed our largest gain, but the average loss did exceed the average gain. So if we take a look, some of the main things I look at, we had, again, our winners, 73% winners. We had a total of 106 trades. 73% of those were winners, which is certainly a good thing. The average days in trade here is, a little bit misleading because many of those trades were shorter term earnings trades, etc. We look at our largest winner, our largest loser. Again, those were pretty close. Our average loser, if we look at averages, our average loser was a little larger than our average winner. Now, overall, that's not a deadly stat, particularly if you have 73% winners. But if that percent were lower, if we had 55% winners and we had something like this, obviously that becomes much more of a problem. And then these are other stats that get used in measuring a person's trading, and they're trading success or lack of success. Those are things that people look at. And to know more about those, if you're an OTA subscriber, you can simply hover over each one of those. But these are what each of those stats means. And if you want to read these, you can pause the video and read those. Or again, if you're an OTA subscriber, you can go into OTA and look at these stats. And these are very common industry terms. These are not unique to OTA. So you can, of course, also look these up pretty much anywhere you want, Investopedia or some of those other locations. So those are some of the measurements that I like to take a look at as I'm trying to evaluate a year or a period of trading. So what are the key takeaways that when I looked at these numbers that I thought? Well, overall, it was a good year, just under 100%. Cannot complain about that, okay? But the Q4 drawdown was pretty excessive, at around 30% drawdown. That's a pretty sizable drawdown. And the trading was probably a bit too active, with in some weeks having as many as 5 to 10 trades or adjustments. Now, part of that was because I was doing some bonus trades. I was tossing in some earnings trades. And, I wanted to provide as much educational content as I could to people. But at certain times, I think a combination of the number of trades that I had out there, combined with the number of adjustments that some of the trades I made were requiring, in some part because I was carrying them very close to expiration. The closer you get to expiration, the more a market movement or gamma will impact that trade, and therefore it requires a little more adjusting. So that's something I'm going to address here in a moment. But I just wanted to note that I do feel that it was a bit too active. That wasn't my goal or my objective, and the survey kind of bore that out as well, as we'll see here in a few minutes. So, and also the trades need to be able to be entered for a longer period of time. And what I mean by that is, as you'll see in the survey, some people were saying that I put out the alert 90 minutes before the close, and they may not have had time to digest that alert or get their order out there, etc. And sometimes they could miss those trades. Now, that's largely because the trades would have been shorter days to expiration, and their pricing gets impacted fairly rapidly as the market moves around. So I have a solution for that as well that we'll be looking at as we move along here in this presentation. So let's take a look at the survey results. I want to share this with you. This is a survey of subscribers of my very first year. How did things go? So I would say that my efforts based on this, I hope that people would largely agree that maybe I got a B, possibly a C plus or a B minus here. But basically, I wanted to try to provide as much education and value as I could in the service. And again, I think maybe in an effort to provide as much as I could, I may have overshared or overprovided in certain areas based on some additional feedback we're going to see. And I'll talk about how I plan to address that. But first time ever effort of doing this, launching a new website, launching a new service, trying to figure out all the bits and pieces. If this is a B, I'm personally satisfied with that. I always want to do better. I want to be an A for everybody. But at the end of the day, as a first time effort, I'll take a B. Some of the comments that people had made, I'll share these with you, good, bad, and otherwise. I'm a very transparent person. One of the things that at least more than one person commented is that we were carrying, particularly in Q4, carrying losers too close to expiration. They required too much management, sometimes intraday management, where if you missed a trade, you could have been in trouble on some of those. Another person commented they found the trades a bit hard to follow. Again, I think that really boils down to the sheer number of adjustments that were involved in some of these trades. I don't normally have nearly as many adjustments in a trade as we had, particularly in Q4. And part of that was due to the extreme market movement. Part of it was due to the type of trade that I was applying to those. In other words, I was putting on trades that in some cases had some upside risk, and as that market ripped to the upside, I had to keep adjusting to try to keep the tent somewhat centered over the market. So I think there was a two-pronged piece to that I think I have a solution for. Some people said they felt the 149 was a little more than they thought the service would be worth. They would expect it to be more in the $99 a month value. So again, just want to share it all with you here. We talked about trading vehicles. Most people do want to see the large indexes traded, the SPX, the RUT. Those are some pretty common trading vehicles. Others wanted some ETFs in there, and then 45% wanted a mix of all of the above. What types of trades? So delta neutral tends to be kind of my focus, but people wanted a mix. They'd like to see a little bit more of a mix. So again, we'll talk about, right now I'm just going through the results of the survey. Then I'll talk about how the results of this survey is going to impact some things I might do going forward. Trade duration. So that 30 to 60 day window here and the 60-day window, the two of those comprise, 40 some percent. And so I think that's certainly, there's something to be noted there as well. And again, I'll get into how this part of the survey is impacting possible trading going forward as well. The time of day. So most people said they didn't care what time of day. So I've always erred toward the side of doing the trades in the last 90 minutes of the market. There's really two reasons in my mind for that. One is a lot of times you don't know the true happenings or direction of the market for the day until you get into those last couple of hours. That's part of the reason. But the other part of the reason is I wanted to try to provide some level of consistency as to when I was putting out those alerts so that people could kind of know when to look for them. Again, just sharing the results here. I'll talk about what the outcome of that is going to be a little bit later. The amount of risk per trade. So some people indicated 250 risk per trade. I will tell you it's very, very difficult to even learn at that point because commissions, slippage eat so much into a trade that if you only have $250 in risk in the trade, you're looking to get out of that trade with, maybe $20 in profit, something like that. And then, of course, commissions and slippage can easily eat up half of that. So I don't envision this service getting down to where it would do that. A number of people said 1,000, 2,500, 5,000. But as you can see, the vast majority here, these three sections right here, so 80% of the people roughly, it kind of largely made no difference to them. I mean, any of those numbers would be fine. So I'm going to be thinking more on that and how I might address that because, again, the vast majority of people, 36%, said, just make your trades, and it's up to me to deal with it from there. So, again, we'll look at that a little more as we go forward. Number of trades open at a time, it was pretty... the vast majority of people wanted 3 to 5, which I think is a good manageable number. That said, the way I do propose to trade in this coming year, there's going to be fewer adjustments that will need to be made, so there will be less overall activity for the most part. Are the trade videos of value? Well, I was very encouraged to see that the vast majority of people did find those to be of value. To me, having in my years subscribed to many, many different alert services and just having a set of numbers spewed out at me when it was time to make an adjustment with no real explanation at all of what that adjustment was about or why I was doing it, it was very difficult to actually learn from the service. And I'm more about the learning than I am the results. Of course, I want to have good results. But at the same time, it's more about showing people how to think about trading, how to think about their trades, how to look at the market and try to get a sense of, what your opinion of that market might be. So for those reasons, I think I was very happy to see that kind of my unique differentiator here is the videos. And that is, in my opinion, probably the bulk of the value of this service. From an educational standpoint to help traders see how a professional trader trades. How does a person that's been trading 30 plus years look at the markets? How do they go through their decision-making process? Now, all that said, I think I can do a little better job on that. But now that I know that everybody else feels like I do, that there is definite value in there, I'm going to work to improve that value. Couple comments here on the alert videos. In some cases, people had said that I didn't explain in detail why I was making a new trade or adjustment. I'm going to go out of my way to attempt to answer that as best I can. And usually I'll be able to explain, why one over another. But of course, I can't go into every sort of a trade. Well, I'm going to do a BWB instead of a Condor, instead of a Jade Lizard, instead of a vertical, whatever. I can't go down all those roads, but I certainly can do a little better there. Adjusting of the trades, again, I fully understand that it got very, very confusing, particularly in Q4, because those adjustments were coming so fast and so furious. I think that the new game plan I have is going to greatly reduce that confusion. The trades will be A, simpler to adjust, B, fewer adjustments, and I'll be able to go into more explanation on each one of those. And I love this comment, wanted to add the video explanation is a great differentiator from other services. That was my goal. That's really what I want. I want people to recognize that that's not something I've ever seen anywhere else out there. And that's one of the big values that I think is brought to the table here. And of course, in the community, the ability of traders to see what I put out there and fire back a question on it. Reach back and say, why this, not this? Or, what are you thinking? I'm not seeing that, or whatever the case might be. You have the ability to interact with me as soon as those go out. Also, the weekend updates. So I'd like to see that these are of value. Again, there were some comments on those as well. They like the technical analysis, but only for directional trades. For delta neutral trading, they find the technical analysis is best not used. Now, I'm going to take a little bit of exception to that because for me, as you saw if you watched this weekend's weekend update, I go out and I look at a range that I'm expecting the market to trade in. So that's a bit of technical analysis where I look at a range. And then I want to make sure that whatever trade I build can largely handle that range. So I think it's very important to do that, to have that technical analysis go into delta neutral trades. The other key factor here, that just because a trade starts as delta neutral doesn't mean it stays there after you have a big up move or a big down move. Those trades will quickly become a directional trade. So what started as delta neutral will become directional. Once it becomes directional, that technical analysis is important to understand. So I like the fact that people like going into the week is insightful. They like seeing that. How I found trades, I do probably want to elaborate on that a little bit more. I do use some different tools for doing that. In this particular case, I was using the Option Alpha platform that surfaced that trade to me. I like this. The Eureka moment of the year was that delta neutral trades are really directional based on technical analysis. So kind of what I explained, the opposite of what this person was saying. This is my opinion on those, that they, even if I'm looking at delta neutral trade, I still want to have an idea of what the market range is going to be. And again, I also need to recognize that delta neutral trade can certainly become a delta positive or delta negative trade in a market move. And I like that people like my review of market expectations. Obviously, I don't have a crystal ball, but lots of years of doing this, I can formulate some opinions in most cases for whatever those are worth. So those are, and then some additional miscellaneous feedback. Earnings trades, people would like to see more of those. I've got mixed feelings on those. I still will do some. I'll still will share some of those from time to time. But my concern is that they do get into being very active with, in some cases, a lot of adjustments and a lot of gamma in those trades, meaning that the market can quickly go against you and go against you hard in some cases. And again, I'll probably still do a few of these from time to time. I will call them bonus trades, and I will explain that they're not for the faint of heart, and they're not for somebody that can't sit and watch the market during the day. This person mentioned they can't always be at their computer and sometimes have to chase a trade. Noted, Eric, and I think you'll see that I've got hopefully what will be a viable answer to that coming up here soon. Let's see. The alert service with low volatility returns, similar to the first three quarters. And so, yeah, that is one of the things, again, that I think you'll see that my shift here is going to help resolve. So the game plan for 2024, what's going to change, what's not going to change. So based on all the feedback I got from people that subscribe to the service, here's what I'm not going to change. We're going to continue with a mix of trading vehicles, SPX, RUT, ETFs, the SPY, the Qs, etc., and obviously some stock in there from time to time as well. I'm going to continue with 3 to 5 open trades at a time with some occasional bonus trades tossed in. Those bonus trades might be like the Google Wheel strategy that is going in there right now. It might be an earnings trade, an earnings calendar, an earnings diagonal, something along those lines. So there will be some bonus trades from time to time, but that's not certainly going to be the meat of the service. Obviously, everyone that is a subscriber to the service has access to the trade archives with well over 100 trades in there, and all the results from every trade that's been made from December 1st of 2022 up through current. They're all in there with the videos, when I opened them, when I adjusted them, when I closed them, and then a final little snapshot of the results of that trade. So those are great learning tools when you're in the community. If you haven't seen that before, it's in the lower left corner, and it's called the Trade Archives Circle. And if you click on that circle, all of those trades will show up there. And we'll continue doing the weekend update that will review our open trades, any trades that were closed the prior week, and the market outlook for the coming week, so that we can help prepare, what might we expect out of our open trades if the market does certain things. What new trades might I look to open if the market does certain things? So just kind of a 20-minute overview of our trades and the market that I'll continue doing each week. So here's what's going to be changing. I'm going to lean toward longer date-to expiration trades. Those trades tend to be much less volatile trades. They'll provide a much smoother overall equity curve. They're also going to result in a little bit lower annual returns, certainly below last year's returns, because these types of trades, they're designed to have less risk, less volatility, but of course, along with those two things also comes a lesser amount of return. And one of the reasons that will happen is I'm going to look to close those trades earlier. So the opportune time, if you look at a lot of different studies out there, the opportune time to close longer DTE trades, and by longer DTE trades, I mean in the 45 to 60, 70-day window, is to close them in the 14 to 21-day window as they get down to 14 to 21 days to expiration. That's when the gamma usually starts to spike in these trades, and therefore a market swing can have a big impact on your P&L. So I'm wanting to avoid that situation, and as a number of people had suggested, see about closing trades earlier, further away from the actual expiration of those options. So that's going to be one of the objectives. The trade alerts could come at any time of the day. However, the important thing to note here is because these are longer DTE trades, I may put out a trade alert at, say, 11 o'clock market time, and I may go ahead and float that order out there, but that order could sit there all day and maybe not get filled. In the case of my most common trade, which is a butterfly or a broken wing butterfly, I'll float that order out there, and if I get filled, great. If not, fine, I'll try it again the next day. If I get a fill and somebody else is trying to execute that trade and they don't see that message for an hour or two, it shouldn't make a big difference, because the price of that trade, unless the market moves significantly or volatility changes significantly, the price of that trade will probably be roughly the same for a few hours, and in some cases even a few days. So if I get filled on something today and somebody wants to look at something similar the following day, in most cases, if you're dealing with a trade that's 45 days out or more, you'll still be able to get a very comparable, if not the exact same fill. So that should eliminate that concern. The risk per trade can be any amount. I may very well change sizes on trades, as some trades are traded better in larger size. For example, I had a person ask me why I didn't trade very many equal wing butterflies, a flat fly, a 50-50 butterfly with a long call. As you saw, we did that a couple times in SPY in the Qs, but they're a little tougher to do in the ETFs than they are because of the amount of commissions that are involved in those. And the volatility doesn't have the same profile that you get in SPX or RUT. You get a little more volatility because the big institutions trade those bigger items, those bigger indexes, and they're just more conducive to this type of trade. However, you can't do a equal wing flat fly in a 2-lot configuration with a long call because the ratio is not right. It takes, depending on volatility, it could take 10 butterflies, 10 50-50 butterflies to one long call, or 15, which means that the max risk in that trade might be $8,000, $9,000, $10,000 in order to be able to get the appropriate call that we need. This may not make a lot of sense to you right now, but when that surfaces, I'll be sure to point that out to everyone. So again, the risk per trade may vary at this point. So here's the single biggest change. I'm going to be cutting the price of the service almost in half for anyone that signs up here in January of 2024. So this means that you're going to get an improved service that your feedback helped to refine and create, and it's going to be for $79 a month. Now, it's not going to be trading as actively, okay? So that's a good thing, particularly if you had problems sometimes keeping up with the trades. But the type of trades that I'm looking to trade should also have less overall volatility, a smoother equity curve associated with them, probably not near the level of return. I wouldn't expect to hit 100% return making trades like this. I would expect closer to maybe half that. And of course, there's no guarantees of anything in trading. That's just my expectation based off my prior experience of trading these sorts of things. So if this is of interest to you and you want to sign up, go to this link. If you're seeing this on wherever you're seeing this, I'll put these links down below so they're clickable to you as well. But you can also just write that link down and go to it. And that will allow you to get the service for $79 a month if you sign up here in January of 2024. Now, another little option for those of you that have not taken the Deep Dive Butterfly course. I highly recommend this course. Butterflies, to me, butterflies are the most versatile go-to trade that everyone should know and understand inside and out. It's the bulk of the types of trades that are done in this service. And my goal is to have everyone learn how these trades work so that you can follow along with me for a period of time and then eventually know exactly what to do on these trades yourself and not need me anymore. My goal, as it states right in when you go to buy this thing, is for you to learn this and fire me, okay? So, but if you have not taken the Deep Dive Butterfly course, if you use this link, I've got 20 slots available here where you can sign up, get the Deep Dive Butterfly course, and get 2 months of the alert service for free. So the Deep Dive Butterfly course is $695, and then you'll have 2 free months of the alert service, and then the alert service will start kicking in at $79 a month at that point. So thank you, everyone, so very, very much for looking at the alert service last year, purchasing whatever classes you might have purchased from me at this point. I do this. I'm very fortunate in that, I've built businesses, sold businesses, but I've always traded. This is what I do for fun and also to help teach people, because I know when I was trying to learn this entire process many years ago, there weren't near the level of tools out there that we have today. I mean, for me to have seen a video from a professional trader as to how and why they were getting into a certain trade, and then a video of how and why they adjust it, I mean, my mind would have been blown back in the day to have something like that. So again, that's my goal. I really love to help people out, help teach. hopefully get you up to speed way, way faster than I got up to speed many, many years ago, just because the tools we have available to us are so much better nowadays. So again, thank you so much, everyone. I really appreciate your time. I really appreciate you checking out the service. And if you are interested, make sure you go to those links ASAP and get signed up. Take care.